Everyone's got their eyes glued to 2026. Rumors, doomsday headlines, endless hot takes. But beneath all the noise, the market's most reliable warning just went off. The yield curve. Okay, quick refresher. The US Treasury yield curve tracks the difference between long-term and short-term interest rates. For a record 7 to 80 days, yeah, longer than ever, short-term rates were higher than long-term. That's known as an inversion, and it's the financial equivalent of tornado sirens blaring. Check this out. Since 1955, every single time the 10-year yield dropped below the 2-year, a recession followed. Not once, not twice, 8 times, 0 false alarms. Now, here's the kicker. As of December 2025, the yield curve has uninverted. That's not a sigh of relief. That's the starting gun. Historically, the recession hits 3 to 18 months after this uninversion. So, danger zone? Smack dab in the middle of 2026. What could actually happen? First, the soft landing. 50, maybe 60% chance. The Fed cuts rates, AI keeps tech spending up, and we stumble through with slow but steady growth. Not exciting, but hey, I'll take boring over chaos. Second, a shallow recession. 30 to 40% odds. Think 2 negative GDP quarters, unemployment ticks up, stocks take a 20-30% haircut. Hurts, but it's survivable. Or, and here's the wild card, the big one. There's $9 trillion in US debt that's about to reset at way higher rates. If Treasury auctions go sideways, yields spike, banks freeze up, well, you remember 2008. Imagine that, but bigger. Even the New York Fed sees it. A 27% chance of recession by September 2026, almost double the historic average. So, what should you watch? 3 things. The MOVE Index. If bond volatility explodes, that's your first red flag. Treasury auctions, one bad 10-year, and rates could rocket up. And credit spreads, if they blow out, buckle up. Look, I'm not here to scare you, just to lay out the probabilities. The yield curve has never lied. The countdown just started, so stack some cash, maybe grab some gold or Bitcoin for insurance. And whatever you do, don't be all in on risk when the timer runs out. Like if you're watching the yield curve in 2026, and drop your biggest recession worry in the comments. See you on the other side.